Welcome back to America's Retirement Headquarters, home of the Retirement Guys formula and America's Medicare Associates with Nolan Baker. 419-794-3030 is the phone number. It's 419-794-3030. You can also find out more about the team, set up a time to speak with them, start developing your retirement team action plan by going to arhq.com. That T in Retirement Team Action Plan stands for taxes. And when it comes to taxes, there appears to be a big retirement myth. Tax guru Ed Slott tells Morningstar that too many assume that their tax brackets will be lower in retirement. Then they hit reality come tax time.
You may think you're going to be in a lower bracket in retirement, but you keep forgetting about that IRA you had, and you did nothing about it to trim that balance down. So it was growing and growing and growing. And now you're forced to take money out. Now it's at age 73. Now your RMDs are larger, yes, than your largest W-2. So that's on the income side, because if you ignore the growing IRA, that's a tax bill waiting to happen. And they forget the IRA continues to grow and accrue for the government.
Mr. Slott's also called it the retirement savings tax bomb. What can someone do to head off that tax bill that is waiting to happen?
You know, I always love listening to Ed Slott. I think he's given some, really great advice over the years regarding being proactive on your tax planning. My wife and I, we recently sat down with our CPA and did an end-of-the-year tax review. And so there's kind of two different times that people want to be taking a look at their taxes, not only coming up with, filing what happened in the past, but, making sure you're setting up that end-of-the-year tax planning meeting with your accountant, enrolled agent, or CPA to be proactive on the steps that you can take to, minimize your taxes that year before the year's over and or in the future years. And, Ed Slott really hits it right on when he's talking about the fact that the reality of your tax brackets in retirement time can often be much higher. And, for the past 30 years of helping hundreds of families retire, the society has taught us this notion that save and invest in tax-deferred retirement accounts because when you retire, your tax bracket will be lower. I can tell you with complete confidence that for an overwhelming majority of the people that were successful savers and investors for their retirement, their tax rates are not lower. And in fact, what happens is they don't sit on the porch and watch life go by. These are the retirees that are, actively out doing things. They're taking the vacations that they want, maybe getting a second home. They're taking the travel plans and doing those Viking River cruises. They're going out and spending time with their kids and grandkids, upgrading vehicles, adding RVs. And what you see is that taxes in retirement time can often be higher for many retirees. And I think about it in something, as you talk about in the Retirement Team Action Plan, that T does stand for the proactive tax advice and guidance that we try to give in working with a CPA or an accountant. But four of the areas which are on the tax savers checklist is number one is Social Security taxes. A lot of people, they don't realize the fact that Social Security is going to be taxable income. And why that could be a negative for you is because up to 85% of your Social Security tax benefits could be taxable. And so if you decided to take Social Security early and then maybe you decided to do a Roth conversion, which Ed Slott talks a lot about, that could push your Social Security from not taxable all the way up to 85% tax. And then, if you look at it in the future in the example that he gave, he talked about required minimum distributions. I had a client that I just met with the other day. In fact, there's two that come to mind. One client was looking at their 2025 income plan. The wife is going to turn 73, and so next year she's going to have to begin to start taking required minimum distributions. They were actually fairly shocked when they found out the amount of money that they're going to be forced to take out of their required minimum distributions. I mean, it's a problem. It's a good problem, right? They're forced to take out more income than what they had thought that they were going to, but that income is going to be taxable to them as well. One of the areas that we talk to people about for required minimum distributions would be the example of doing the Roth conversions to help lower what could be RMDs in future years. And or for those people who are philanthropic, they donate to their church or a charity, considering learning how you can donate some or all of your RMDs directly to a charity which can help the charity and also help you on a tax perspective. Number 3 is looking at capital gains and investment income. This is another area that we try to look at our clients that have taxable accounts, because if you make buys and sells throughout the year, that's going to result in either a capital gain or a capital loss. And also, when we talk about things like the high interest money market accounts, again, all good problems, right? The reason you're investing is to make profits. The reason that you got a high interest money market account was to earn more money. But that higher money ultimately can result in higher taxes in retirement time. And then this is an area where it does create one of those compound effects. So when you look at the Medicare premium, and Scott's not on the radio this week just because of the fact that annual enrollment period just ended, and with AEP and having a couple hundred meetings, I think he deserves about a week of rest, but we'll get him back on the radio. But one of the things that he would share with you is that your Medicare premiums can also go up. They could double or triple based upon what your countable income is in retirement time. So the way to get ahead of this is to get together with us. Again, we'll go through that retirement team action plan, and in the T part of it, we'll help you create a tax roadmap for 2025, and we'll also walk you through the tax savers checklist. There was 4 ideas on there, but we have 25 total that we go over in that retirees tax savers checklist. So happy to help you figure out the reality of taxes in retirement.
And making sure that you find ways to, pay obviously what you are required to pay, but hopefully not a penny more than that. Less money going out to the IRS, Uncle Sam, means more money you get to keep for yourself. Tax is a pivotal part of retirement planning. That is why it is the T, the first part in the retirement team action plan. To get started with America's Retirement Headquarters, have them create that for you. Give a call, 419-794-3030, or you can reach out and set up a time on the website as well at arhq.com.